All right. How is everyone doing? Appreciate you guys hopping in here. We're going to give it just a couple of minutes, let everyone kind of get settled in. I would love it in the chat to see where is everyone joining from. Drop what state you're in, where you're located. Would love to see where everyone is. Awesome. Hampshire, Missouri. Okay, we got Florida. We got a few in Florida. Fantastic. Chicago, great. Kansas City. I see. Okay, California, we got the entire U.S. covered, it looks like. We're coast to coast. So that is fantastic. I'm looking forward to chatting with you guys. To quickly introduce myself, so my name is Cody with Prime Corporate Services. Prime, we are a legal, financial, and tax firm, and we've been in business since 2012. So this is a space we are very, very comfortable with. I've got some exciting things I want to talk to you guys about today, really just to make sure you're putting your best foot forward, right? From both an asset protection standpoint, from a taxation standpoint. We just make sure we're doing everything we can to ultimately keep our money in our pocket rather than sending it to the IRS. So we will dive right into it. And as we're going, we're going to have plenty of time for a Q&A, so please ask questions. Like I said, we'll have more than enough time to kind of go back through some things. If I'm going too quickly, let me know, but we will get started. So just a quick disclaimer first and foremost. The slides we're going to go through today, know that there are a lot of numbers in here that are just examples. None of these slides are based on anyone's current income levels. This is really to show you how all of these components work together. The purpose of this, like I mentioned, I want to educate and share best practices. We're going to talk about our most recent tax reform, what's changed, how it impacts you. We'll then really dive into the foundation from both a legal and financial perspective. And then my favorite part is getting everyone on the path of asset protection and tax savings. There very well could be things in here that you are already familiar with. So if this is a refresher, I'll apologize in advance, but I'm confident that everyone will take something away from this as we go through it. So to give a little more background on Prime, so there are four, areas that we service. So starting at the top left, entity formation. We set up LLCs and corporations across all 50 states. Moving to the top right, we then have an in-house credit division. So we help our clients with building business lines of credit and securing corporate funding. The idea with that is we want to get everyone away from being the personal bank to your business. You can go back to that one. So the four areas we service, again, entity formation, our business credit program, right, helping establish and build business credit. That way you're not the personal bank to your business. We also do estate planning, so setting up like trust, wills, living wills, power of attorneys and such. And then obviously our in-house tax division also, doing both business and personal taxes. So we can go back through the LLC portion of it. Hopefully everyone was able to at least hear what I was saying. But if you want to click to the next slide. So there are 7 functions that make up the LLC. Okay? So the first one is the legalization. So by filing all the documentation with like your Secretary of State and the federal government is what allows us to legally start our business, right? You have to have a legal start date in order to treat this like a business. And then of course, the separation and protection is what separates you along with any personal assets from liability from your business. This way somebody can't come back and try to sue or liquidate you personally. Right. Number 3, the operating agreement. This is when I was mentioning that if taking notes, I would definitely put a star next to it. This explains ownership percentages, gives like the rules, regulations, how your profits are being distributed. Without an operating agreement, this is actually one of the most common mistakes that we see is somebody will set up an LLC with no operating agreement. And essentially at that point, you have the shell of an LLC, but if you were to be sued, that could still pierce the corporate veil and pass through you personally. So having an LLC with no operating agreement is ultimately not doing you, what you need by any means. Right? Number 4, the tax deductions. So there ends up being over 250 sanctioned deductions, so 250 individual expenses. The next slide will show kind of a list of some of the most common deductions. So paying for, coaching and education or mentorships, your home office deductions, travel expenses, business meals, all of these things become tax deductible. So as I mentioned, we have an in-house tax team where our team will actually sit down with you and we'll walk you through, how to track expenses properly, what's important to keep a record of. We'll talk to you about the different mitigation strategies that you can use, because another huge mistake that I see happen is somebody will set up an LLC, but then in turn, they really don't do anything from a separation standpoint. So they'll set up an LLC, but maybe no business bank account. All the funds then travel to their personal. In turn, you're commingling. Ultimately, you're leaving yourself open to a lot of unnecessary risk. So setting up the LLC, having a separate bank account, and tracking your expenses are probably the three most important things you could do. The pass-through taxation, again, very, very important, but this allows you to apply all of your deductions against your overall income. So when you file taxes at the end of the year, you still file one form, or it's one tax filing that includes both business and personal. And doing it this way allows us to apply all of those 250 different maximum portion deductions against your overall gross taxable income across the board. Okay, now, the example, we'll run through this really quick. Looking at the example on the left, this is somebody who is a single tax filer, so not married, and we'll say they do not have an LLC. And if this person makes $65,000 a year, at tax time, all they can do is take the standard deduction of $16,100. Now, in turn, you'll notice that lowers the taxable income to $48,900. In a 26% average tax rate, 12 grand, give or take, still goes to the IRS. Now, if you compare that to the example on the right, same case study, so same person, but now we've structured an LLC. So a few things to point out are the income level stays the same. So still brings in 65 grand. At tax time, this person still takes the same 16,100 standard deduction. But then on top of that, they also get to write off all their business expenses. So hypothetically, if this person pays, $10,500 for business expenses, now you'll notice the taxable income is brought down to $38,400. In turn, that also moves into a lower tax rate at 19%, and now you see only $7,200 goes to the IRS. So all in all, by simply setting up an LLC, and this example is about $5,500 a year of tax savings. And if you go to the next slide, and if you, like I mentioned, if you compound this over year 2, 3, 4, that in itself is the low-hanging fruit, right? That's the easy way to have a positive impact on your tax outlay. Okay. Now, the sixth function, so the next slide would be the startup provisions. So for example, when you're first getting started, when you enroll into like a mentorship or an educational platform, buying a computer, any one-time cost to really get your business up and running, we can capture that at 100% deductibility through your startup provisions. So we want to make sure that we kind of push as much as we can into that startup provision bucket so you get to write it off as a dollar for dollar deduction. And then last but not least, number 7 is compliance, which compliance is the business's stamp of approval. So it's a federal compliance you obtain with your EIN number. And then when you're setting up like your business bank account, working with either clients or contractors, just anybody that ever needs to verify that you are a legal, legitimate business, compliance is how they do so. Some of these questions we can kind of just run through. And then let me actually first go through the two biggest mistakes that I see is somebody will form an LLC, but in turn, they're not using it correctly. Okay, what I mean by that is, again, commingling. So they'll set up the LLC, but they never open up like the separate business bank account. They're running all their expenses through one account, both business and personal. You definitely do not want to do that. Make sure you have separate accounts for each LLC that you structure. Keep as much separation as you possibly can. And like I mentioned, no operating agreement is probably one of the biggest ones. Yeah, so Dennis, this is a great question. And something I get very often is, I have one LLC for an independent contractor business. Should I set up a new one for real estate? Absolutely. I would not recommend running multiple incomes through one LLC. You're ultimately just leaving yourself open to unnecessary risk. If you set up a new LLC for the new real estate venture, you bring back into play the startup provisions, and then in turn, you can keep everything separated. So I definitely would set up a new entity. Into a legal document notary. So Billy, this is a great question as well. So the operating agreement, we obviously structure it on your behalf. Once it's structured, then you would sign it, And once it's signed, then it becomes a legal document. Okay? But you don't need to have it notarized. It's a document it's an internal document for your LLC that kind of governs everything, but nothing you have to go and like have a notary sign or anything like that. From Emily asks, would you separate rental property LLC from real estate? Yeah, absolutely. Emily, that's a great question as well. Separating a rental property LLC from a real estate agent, certainly I would, right? Again, if you're funneling all this through one LLC, and imagine if something were to happen and somebody decided to sue you, that in turn could impact that rental property. So I would definitely keep them separate. And again, kind of going back to, you don't want to funnel multiple streams of income through one LLC. So yes, I would definitely say separate those as early as possible. Great question, Pamela. So I actually have a link that I'll share where everyone can book a call with us. We offer a complimentary hour-long consultation with my team. They'll sit down and they'll deep dive kind of everything that we do and put a game plan in place that's specific to you. From there, they can go over all the numbers with you, what it would take for us to do it. Again, that could be where we do all 4 of our services for you. We can kind of a la carte them however you want it to, but we can absolutely help you out. But that complimentary consultation is worth its weight in gold. You have nothing to lose and everything to gain by jumping on. Whatever questions you might have, we can address all those for you and make sure you're on the right direction. The question right underneath that, are you able to form an LLC and have the past tax year count underneath it? I want to make sure I'm understanding correctly. So if you were to form an LLC today, you can take your deductions from January 1 of this year. You wouldn't be able to go into last year to capture expenses unless it was a startup expense. You can go backwards for startup expenses, but I couldn't go into like 2025 to write off like my cell phone bills or internet. It would have to be done in the same calendar year the LLC is created. Can you speak about paying yourself from self-employment for the business account? Yeah, great question. So this actually kind of ties into the second mistake that I see is somebody will set up an LLC and the default status for an LLC would be a disregarded entity. Now, based on how much income you're generating, and really where your accountant comes into play is you may want to transition to like an S corporation, right? Now, again, if you have, and you could ask 10 accountants and probably get 15 different answers, but usually about $50,000 a year of active income makes sense to take the S election. In turn, that decreases your self-employment taxes, your FICA taxes. So there are creative things that you can do, but when it comes to paying yourself, if you are operating as an LLC, there's really nothing creative that you have to do aside keeping a record of the income that you are paying out, but it's your money. Once your LLC makes the money, those are your dollars to do with them what you please. So you just transfer it from your business account to your personal account. Now, if you get to where you have an S corporation or a C corporation, depending on what it is, at that point, you'd have to put yourself on like a W-2 and actually pay yourself or take a salary or a reasonable distribution throughout the year. So it all based on what the entity is, but with an LLC, it's very, very simple. Just simply transfer the money and use it for what you need. Understand that taxes are not taken out of that. So if you make $10,000, I would definitely set a portion of that aside for taxes, take the rest out, use it for whatever you need, but know that taxes are not already taken out of that. Ben asks, what do you think of a series LLC for rental properties? Ben, another great question. So a series LLC, they are gaining a lot more popularity. They are not recognized across all 50 states yet. So I still lean towards the holding company with subsidiaries from a privacy standpoint and asset protection. But I think over the next, 18 months, 2 years, a series LLC will definitely be more relevant, just not quite there yet. Steven asks, do startup provisions apply only for a new LLC? What if I've been in real estate for several years already? Another great question. So the startup provisions are based on the entity itself. So if you've had an LLC in place for several years, then unfortunately you're out of the startup phase. By setting up a new LLC, you bring the startup provisions back into play. Brenda asks another great question as well. Do you recommend having an LLC for each rental property? You could make a case for it. I have plenty of clients that operate that way. Really, it comes down to your own personal risk assessment. The one thing that I would actually go in the opposite direction and say what I hate seeing is when somebody has, 8 or 9 properties in one LLC. That is just way too much unnecessary risk. A good rule of thumb is you could have, 3 to 5 properties per LLC. If they're all in the same state, that's completely fine. But I have plenty of clients that will do one LLC per property just from an ease of use standpoint of keeping all of your income separate, expenses separate. It's up to you ultimately. If you can have multiple in one LLC and keep a detailed record, then go for it, but ultimately your choice. Yeah, Mary Pat, that's correct too. You can just list it as disbursement. That's fine. Yeah, so if you're doing like real estate, along with insurance, I would definitely have 2 separate entities for that. Emmanuel, having an LLC or a PLLC, it kind of depends. It ultimately depends on what it is that you're doing in the state that you're in. My team is more than capable of discussing with you, going over the specifics and giving you the best recommendations so we can talk about it. Yes, Mike, I will share that with you right now. So this link that I'm sharing, if you click on this link, or you can copy and paste it into your browser, that will allow you to schedule a complimentary one-on-one consultation. And my team is more than happy to chat with you. They'll answer any of the questions that you have. I can promise you they won't have issues with their slides, so I apologize for that, but they'll absolutely take care of you. Let's see. So Cheryl asked, I'm an LLC in Washington State, moved to California for work. So, I mean, it depends. It's a good question. Depends on the kind of work that you're doing. So, for example, if you have like real estate in Washington, you could keep the LLC there for that real estate. If all of your income is going to be based in California, then I would definitely have a California LLC. So Edwin, this is a great question as well. So Edwin asked, if I purchase my primary residence with an LLC, do I need to work for that LLC? Meaning, do I need to report income? Honestly, I don't recommend purchasing your primary residence with an LLC. I would only put properties in the LLC that are income generating. So if your primary residence is not an income generating property, I would just keep it in your name personally. That's where estate planning would come into play. Let's see, Sajid, NJ Realtor. Sajid, I hope I'm pronouncing that correctly. Maybe if you can expand on your question. I just want to make sure I understand what you're asking. Absolutely, Edwin. Fantastic question. And then, Sanjeet, as soon as I see your question come through, I will address it for you. Yeah, Marius, absolutely. So we can handle everything for you. We could set up your entities, help with the business credit, the estate planning, taxes. We do it all here in-house. And the great thing is, so even to expand on like the tax side of things, right? Our team is going to make sure that we are going to be aggressive in areas we know that we can, but we don't want to leave any stone unturned, right? We really want to make sure that we are, again, going through all the deductions that are applicable to you. I'm even talking about maybe some new tax strategies you haven't thought of. For example, one of the big ones is like the Augusta rule, right? The corporate rent package. Or for those of you that have kids, if you have kids under the age of 18, we'll teach you how to pay your kids a salary throughout the year. All these different creative ways that you can really decrease your tax liability, because ultimately that's what it's all about, is keeping your money in your pocket. Yeah, Shaquita, that's actually fantastic. So adding your LLC to a trust, it's very simple. It's done in the operating agreement. And I strongly advise that you do that, because again, if something were to happen to you, that is the easiest way for you to then transfer or distribute that business to either a loved one, whether it's a spouse, a family member, without needing to go through probate and having a lot of unnecessary costs or what they call death taxes applied to your family members. So tying it to your trust is very, very important, and we obviously handle that here for you. We're a realtor site. June, I would not. I would keep those separate, right? I would have an LLC for your realtor side of things, and then I would have a separate LLC for your rental. Right? Keep them in two separate entities, just from, again, separating the expenses, separating the income, but also not letting one stream of income create liability for the other. So, okay, so that makes way more sense. So yeah, I mean, if you are, anytime you're creating any sort of self-employment income, right? Whether it's through, again, being a realtor, whatever it is, definitely want to create an LLC. Give yourself the tax benefits and the protection. Without it, you're just ultimately, you're leaving so much money on the table that's going to the IRS. Yeah, Jeanette, that very well could be true. Right. And really the LLC, that's the easiest part of it, right? Again, just if you only look at it from just one lens, where look at it just from the tax benefits. When you create income, whether it's through, a sole proprietorship, any type of self-employment, taxes are not taken out of that yet. So in turn, that means you're going to be taxed on all that income. So the more deductions you have allows you to decrease your tax liability throughout the year. And that's, again, another massive mistake that I see is somebody will set up the entity and then do nothing with it once it's in place. And in turn, tax time gets here and there's a pretty hefty tax bill that you owe that can easily be decreased just by, again, being creative, working with a tax professional or a strategist that can help you with some of the creative ways to offset your tax liability. Yeah, so as far as the cost for setting up an entity, what we have worked out, we call it a complimentary discount. What we mean by that is, if you come to us through the link that's been shared, we're not going to charge you all of our in-house legal fees like a typical attorney would. Right? We're not going to have like our hourly rates or anything like that on top of what you would pay for would be the hard cost of setting up the entity in the state that you're located in. Now, there's 50 states. Each state has their own filing fees. So on average, it could be anywhere between $400 to $600, depending on what state you're in, give or take. I mean, there are a few states that are more expensive, some that are less, but I'd say a good average is about $400 to $600, depending on where you're at. Yeah, John, absolutely. So Wyoming is a great state to set up your LLC in. Delaware, Nevada, South Dakota, any of those corporate haven states, they do give you the additional privacy as well, which is something our team will talk to you about and really just make sure you're going in the right direction. Karen, that's perfect. Our team will take care of it. Can talk to you about through all of it. So even with your North Carolina LLC, setting up in California, we can talk you through kind of all of it. So I'm glad to see you got that scheduled. Yeah, Ben, fantastic, right? Again, the goal is to, based on how much income you're generating, eventually get to where you can justify having an S election. Once you have the S election, just so everyone knows, the difference between an LLC and an S corporation, they are really the exact same thing. The S corporation, however, saves you roughly about half of your self-employment taxes. So rather than paying 15%, you're looking at roughly 7.5%. So it decreases your overall tax liability. But again, once you're generating enough income to justify it, which is where your accountant comes into play, my advice is I would never recommend that you just elect the S corporation on your own. Always let your accountant decide it for you, and they can kind of crunch the numbers and tell you when it's beneficial and when it's not. Selling real estate in 2 different states. Alyssa, you're not wrong. You definitely can file your own LLC with the Secretary of State. The biggest thing that I would say that to be cognizant of is that you wouldn't get an operating agreement, which in turn just leaves yourself open to a lot of unnecessary risk. But yeah, I mean, filing with the Secretary of State is pretty straightforward. But ultimately, again, can leave yourself open to a lot of risk that you can easily avoid. Yeah, Kristen, absolutely. Once your LLC is formed, it's very easy to pull it into a trust. That's not difficult at all. It's just one simple change in the operating agreement. Let's see, David's selling real estate in 2 different states. David, I mean, again, I would. It may be overkill. I would definitely book a call with the link that we shared. There's a few things I'd want to dive into a little bit further and get some more information on, but our team can look at it further. That link, you can copy and paste that link in your browser, and that will take you right to our scheduling page, and you can find whatever time works best for you. Feel free to jump on. Yeah, absolutely. Mary, separation is key, right? That's one of the most important things that I see happen. We've been in business since 2012, and I've seen almost every situation under the sun, and separation is probably one of the biggest downfalls that I see. Is the idea is there to set up an LLC, fantastic, but I think if you only go, through 60% of it, right? Again, not having the operating agreement, not setting up the separate bank accounts, you've done most of the work. Let's just make sure you do all of it to give yourself the full separation, the full tax benefits, the full protection. Gabby, yes, I absolutely do have reps that do speak Spanish. When you book the call, just let them know, right? You'll book it with someone. It may go with someone who speaks Spanish. It may not, but we can easily get it rescheduled and put on with someone who speaks Spanish. Barbara, absolutely. So we do offer a registered agent service. So you could actually use our address. We have one in all 50 states, which will in turn provide you a little more privacy, anonymity. That way your address is not listed on public documents or public record, which I always recommend. Give yourself as much anonymity as you possibly can. We got about 15 more minutes, and trust me, please keep firing away with the questions. I strongly advise book a call. I can almost guarantee there's questions either that you've not asked yet or questions you'll think of after we're done. By booking a call, again, it's completely complimentary. There's no fee for it. And there should be appointments available on there after September 1. Is it telling you that there's not? If you click over to the September calendar, let me let it load, but it should. Jesse, exactly. You can do an owner's draw, distribution again with a disregarded LLC. Once that money hits your business bank account, technically that is your money. They're your dollars. Understand taxes are not taken out of it yet. So again, pay yourself out, but I would set a portion of that aside to plan for taxes. But it really is as simple as, again, taking the distribution owner's draw from your business checking account, transfer to your personal, use it for whatever you need. Just keep a record of what it is that you took and how much you made. What I would do then, John, in that case, because I'm seeing the same thing, which their calendar link should be open for at least 2 weeks. I would book one for the 1st, and then you'll get a confirmation link, and then you can reschedule to that confirmation link once you get it. Interesting. Yeah, I feel like I'm being what was the show on MTV, Punked? I feel like I'm going through Punked right now with my slides not working. Calendar link only goes out for a couple of days. I'm not sure what's going on. Ben, we actually recommend Relay. RelayFi is probably one of the best banks to use because with each account you set up, you can have like sub accounts underneath it. So you have an account for like accounts payable, accounts receivable, an account, for your taxes. Just makes it very easy to give yourself that separation, but more importantly, being detailed and organized. So yeah, RelayFi is who we recommend as well. Any other questions you guys can think of? I mean, feel free to fire away. Even if it's something we didn't cover, I'm happy to answer anything that I possibly can for you. Marius, thank you. I appreciate it. And I apologize for the hiccup. I'm not sure what was happening with the slides. I promise you, we really did test it before we hopped on, and it worked. So very good chance I probably clicked a button wrong, but Yeah, Luis, great question. So when you put your LLC into a trust, obviously having the will, right? You would explain in your will what happens upon a death, or if somebody were to pass away unexpected, then you can leave the business to whoever you choose to. So it could be in your will, you could outline, hey, I'm going to leave this business to a loved one, whether it's my spouse, one of my kids, split it up equally between your kids. It's all outlined in your will that you would get with your estate planning documentation. But as far as attaching your LLC to your trust, like I mentioned, it's all done in the operating agreement, which again, very, very important. So 2 questions. Okay, so Tony first, do you have an opinion about asset protection for rental properties in an LLC? Tony, can you expand on the question? I think having your rental properties in an LLC is very important, just because, again, it's income producing, rent to people that obviously you don't want to take advantage of you. If someone were to slip and fall, you don't want them to sue you and then ultimately have that fall on your shoulders personally, but having the LLC separates yourself. And then why do you advise against LLC for personal property? Yeah, so if it's for like a primary residence, it's not income generating. So if it's just the home that you live in, you're not producing income from it, so the LLC really doesn't do anything for you. LLCs would be for any of your income producing assets. They are separate from me. Yeah, Stephen, so the difference between the LLC and the S Corp, from a protection standpoint, they're the same. They give the same protection. The biggest difference is the S Corporation saves you more on your self-employment taxes. Rather than paying 15%, you pay about 7.5%. That doesn't really become a benefit to you until you're generating roughly $50,000 a year of active income. For losing the property, discovering issues after purchase. So think of the LLC more in the sense of it's going to protect you from liability. So if you have, again, let's just use a rental property, for example. In that property, the tenants that you're renting to get electrocuted, or I don't know, they slip and fall, right? And they decide they want to sue you. They're not able to sue or liquidate you personally. It's sticking with the business. Yeah, so the LLC would do exactly that. It would shield you from future liability if somebody were to get hurt, or they claim that, somehow you got them sick, injured, whatever the case is. You don't want them to come after you individually. So they would be, that liability would be sticking with the business, not with you personally. So all of your personal assets are shielded from that liability. Yeah, same difference. That's actually a good question. So in the past, that was the case, right? Single member versus multi-member. But now if you even have a single member LLC, you still give yourself the same protection. I still think single member LLCs are better than having nothing. From a liability standpoint, that's a much deeper conversation we can get into. But from a liability standpoint, a single member LLC will do everything you need it to. Any other questions you guys can think of? Tony, are you saying those were like you have properties located? So, Shaquita, that's a good question as well. That's where I always recommend, before you make any decisions on changing your, taxation status, always consult with your accountant, right? Let your accountant be the one to make the decision for you. Because again, there may be a situation where you fall just barely under the threshold. There could be differences, right? So I don't recommend making it yourself. That should probably be something your accountant does for you. Yeah, absolutely. If you have a rental in your own name, it's very easy to switch it to an LLC. Once you have the entity created, it's not difficult to change it to have it fall under your LLC. Barbara, great question. So when a Wyoming LLC is needed, or just stick to an LLC that's in your home state. So it kind of depends, right? Having the Wyoming LLC, it does give you additional layers of privacy and anonymity. Wyoming being one of the corporate haven states, they they don't list names of members on public records. No one can look up your business and see that you own it. Then in turn, your Wyoming LLC would own a subsidiary LLC in the state you have a property in. And then in turn, if somebody were to go look into that business, all roads kind of lead back to nowhere. So it just gives you the additional layer of privacy. Not a requirement by any means. It's recommended, but you don't have to operate that way. You can do just a standalone LLC if you wanted to. Yeah, Tony, you definitely can. If you feel more confident that way, go for it. You absolutely can set up as a multi-member if you want to. Katie, absolutely book a call with us. We can definitely take a look at what you have and we can make some recommendations for you. And then John, does it take long for your paydex score to become established? No. So John, it really doesn't take a long time. It's all based around activity. So our process is really to get you through what we call the 4 steps, the 4 orders of operations in a, say, 2 to 3 month, maybe 4 to 6 month time frame. It kind of depends. It's varies situation to situation, but no, it's not long at all. Ben, you don't necessarily need to foreign file unless you're filing. If you have an LLC in one state, you're then going to foreign file that same LLC to a different state. But I would recommend just setting up a new LLC in the new state you're going to be purchasing property in. So Brenda, a PLLC is a professional LLC, so somebody who's licensed, which again, it differs from state to state, like doctors, attorneys, sometimes like orthodontists, right, that have a specific license for their industry. They have to have a professional LLC. Some states don't recognize them, some states do. So again, book a call with our team and we can look at exactly where you're at and make recommendations. I'm told a Wyoming LLC has nothing for anonymity. That's tough. I mean, the information can be subpoenaed by a judge, but as long as you're doing business the right way, there's really nothing to worry about. It's really more from like the general public not being able to look into it. But think that if an attorney's looking into your business, there's obviously a reason for it, right? If you're doing things the wrong way, then I could see an attorney wanting to look around, which they could potentially see it, but definitely doesn't make it any easier on them. I wouldn't say that it's not recommended. It depends on what state you're in. Our team, we have a whole list of what states are required, what states are not, which states recognize and which states don't. Our team can look at it and we can give you more information. Your EIN number should not be public. Your EIN number comes from the IRS, not from the state. There could be a filing number they could see like on SunBiz. But I don't know how they would see your EIN number unless you went and enlisted it after. That's an interesting one. We'd have to look further into it. I'm not sure how they would even find that information out. Sound good. Well, I appreciate you guys letting me hop on. I do have another meeting I've got to jump into. Again, I apologize for the first part of this with the slides not working, but again, book a call with our team. We're happy to go back through any of the information with you. Just make sure you're going in the right direction. If you have more questions, you can always feel free to reach out to us. You can either reach out to Prime directly. You can find our info online. If anything I can help you out with, that's what I'm here for, but I appreciate it, and I will let you guys enjoy the rest of your day. Thank you all very much.